Good morning, folks. Trust we are doing good. Welcome to another webinar session that we've got for everyone. Welcome, welcome, welcome. First off, apologies for the 5 minutes delay. We're trying to get a few things set up for the webinar. That was why. Apologies for the 5 minutes delay. So, how are we doing, everyone? How was the last trading week? How has it been? How was the weekend? Hope we all had an amazing time because I really enjoyed myself over the weekend. And also, I had an amazing trading week last week. Okay, an amazing one. And I wish everybody did the same or everybody had the same. And also, to get consistent result from the financial markets is very easy. Okay, consistent results from the financial markets is very easy. All you need to do is show up. Okay, show up consistently to the markets, do the right things over and over again in the markets, then you get consistent results. That's how it is. There's no shortcut to it. There's no quick way to it. You just need to show up. That's how you become consistently profitable in the financial markets. Good morning, Debbie. Good morning, Linda. Good morning, Basi. Good morning, Vera. Good morning, Halimat. Good morning, Latifa. Good morning, everyone. Like, it's amazing having everybody here. Okay, everybody here. So the rule still stays the same. We've got the chat box for chat sessions. You want to converse with anybody? We've got the question section to drop your questions in. The poll section to respond to any polls I send out, and the people section to check if your friend is on the meeting. Okay, so we can see a lot of things going on the Telegram group, and I'm so glad and happy. I'm so glad and happy that there's a lot of things going on the Telegram group, and I promise to give the Telegram group more time. Okay, more time where we get to analyze, talk, and discuss about the financial markets more often. Okay, so how has it been? How was the trading week for you guys? Okay, let's talk. How was the trading week for you guys? How was it? How was it? Hope it was good. Did you have any drawdown? Were you struggling with a few things? Please let me know so I can be of help to you before we hop into today's session. Okay. And for the new guys on the call, I'm your host, Akinwale Chibuike. I hold these webinars Tuesday and Thursdays every week, and sometimes Saturdays also. At a good global market, we give you financial freedom. Okay, we give you access to financial freedom, and access to financial freedom. Basically, in my own sense, I believe it's we giving you access to trade the global financial markets, because the global financial market is the quickest way and the easiest way, and also one of the unpopular way to grow your wealth. Okay, growing wealth is easy once you understand how to trade the global financial markets, and that's why today we'll be talking about 5 trading indicators to improve your profitability in the financial markets. Okay, 5 trading indicators to improve your profitability in the financial markets. Can anyone remind me what we discussed previously in our last webinar? Can anyone remind me what we talked about in the last webinar? Can anyone remind me what we discussed in the last webinar? Morning, Vera. Yes, we talked about gold. Okay, we talked about gold, the gold standard, every little detail about gold. We talked about it. Morning, Ajos. Hope you're doing good. Hope you're doing good. Yes, and I remember I made sure to explain and break down everything that has to do with gold. Okay, everything that has to do with gold. And today, today we'll be talking about something I find very interesting, which is indicators. Okay, now there's a lot of rumors around indicators in the financial markets. But before we even go into the whole rumor about indicators in the financial markets, at Eagle Global Markets, we have 3 products that works for you. Okay, for you, the products are for you. Okay, the first product is the MT4, where you can trade the global financial markets in dollars. Okay, you can trade global financial markets in dollars using the MT4 platform. We have a copy trading platform where you can trade the global financial markets in naira. Okay, in naira, you can trade global financial markets in naira. And lastly, we have the copy trading platform. Okay, the copy trading platform, where you can trade global financial markets in dollars. Okay, we have the copy trading platform, which is the last one, where you can trade the global financial markets in dollars. Okay, and trade global financial markets in dollars there. So those are the three major products we offer you at TV Global Markets: the MT4, the cloud trade, and the copy trade platform. Okay, copy trading, if you can't or if you don't want to learn how to trade, you feel learning how to trade is too stressful, you just want to make your money work for you, you copy trade. Okay, that's like the best thing everyone has to do. Like copy trade is easy. You can easily find a trader on our copy trading platform and mirror his trades and start making money. Just the regular saying, monkey they walk, babu they chop. That's just the logic there. Okay, so today we'll be talking about indicators. Okay, indicators. um and to us, what do we think indicators are? Okay, what do we think indicators are? I'm open to, like I said, nobody's wrong. Nobody's wrong on my watch. Okay, nobody's wrong on my own watch. You just have to make it resonate around the financial markets. Okay, what do you believe indicators are? What do you think indicators are? Okay, market behavioral pointers. Brilliant, Vera. Brilliant. They are tools used in analyzing the financial market. Yes, yes, yes. So true. Okay. So true. Anybody else? Anybody else have something to say on indicators? Anybody else has anything to say about indicators? I think I saw Ajos typing something to talk about because I see he uses indicators and price action a lot. Anybody else? What do you think indicators are? Okay, one of the financial tools that shows directions in the markets. Yes, that's very true. Okay, that's very true. But almost some indicators show direction and some don't show direction, but still it's still an indicator. So I'll take that. Pointers to the trend of price at the time. Yes, some indicators tell you the trend direction, some don't. Okay, so um they are majorly, how would I put it? They are like speedometers. Okay, you know, if you have a car, I'm using a life example to explain now. You have a car, it tells you a certain speed you're going at. It tells you a certain speed you've been going at. Okay, it's just like the fuel meter also. It tells you if you've got enough fuel or you have less fuel. Indicators are just pointers. Okay, they help point things in the financial markets. They help point things in the financial markets. That's what they majorly do. They are pointers. They help point things in the financial market. Okay, I'm back. Sorry for the breaking connection. Now, basically, I like the fact that everyone is talking about pointers. It tells the trend. Now, not all indicators tell the trend. Okay, not all indicators tell the trend. I want you to understand that. We have the trend indicators, those that tell the trend. We have the oscillator indicators, those that give you a sign when there is a reversal. We have the momentum indicators, we have the volume indicators, we have the volatility indicators. So those indicators are grouped in parts, okay? They are grouped in different categories. But today, I just want to tell you about the top five, okay? Indicators you can use to improve profitability when you trade, okay? So here's the slide. In this session, you learn indicators, okay? What are indicators? Should you use them? RSI, MACD, stochastic, moving average, and fractals, okay? And fractals. Now, the reason I have more of oscillators and one trend and oscillator indicator on this list is because of I wanted to be easy. Okay, I want the whole process to be easy. The process of understanding which of the indicators to use. I want it to be easy so people can actually decide. Our clients can decide which one to decide on using. Okay, now indicators. What are indicators? What are indicators? Um, Indicators, like we said, they are pointers. Okay, they are pointers. They are pointers in the financial markets. They are used by traders to understand price. Okay, they are used by traders to understand price. Now, most of these, or what indicators generally are just calculations, mathematical calculations from previous price action. Okay, so an indicator works based on um, previous price action values. Okay, if the candle has moved 40 days back, the previous price action value is what will be used to calculate the whole process. Okay, that's basically how it works. That's how it works. Very easy to understand. That's how indicators are. That's how they work. They work based on previous price action. So they tell you with a slight idea or with a few nudges on what price will be doing next. That's how to tell you with a few nudges on what price will be doing next. So do we all understand that? Do we understand? Yes or no? Do we all understand that? Yes or no? Okay, brilliant, brilliant. Now, should you be using indicators? I want everybody's response on this, okay? Do you think it's right for you to use indicators? Yes or no? Do you think it's right for you to use indicators? Do you think it's right for you to use indicators? I like to get a lot of response. Do you think it's right for you to use indicators? Okay, normally use it. Okay, okay. A lot of response says yes. Wow. Now, the truth is, yes, it's good to use indicators. It's good to use indicators. Okay, good to use indicators, but it is not good to use indicators alone. Okay, it's not good to use indicators alone. It's not good to use indicators alone. You can use indicators the way they are, but using them alone, no. Okay, the reason is because of the lag. Like, I don't want to pronounce your name wrongly. Yeb said the lag. Okay, not some, all lag. Okay, all indicators lag. Now, understanding that all indicators lag, understanding that all indicators lag, the truth is you don't want to use them alone. You want to use them with something such as price action. Okay, you want to use them added on the side with price action. That's how you want to use them. You want to use them added on the side with price action, because price action will help you understand it better. Okay, it will help you understand it better, to help you understand how price is behaving, reactions price will give us. It will help you understand it better. That is why you shouldn't be using indicators alone. Now, now that we've understood indicators, should we be using them alone or not? How should we approach them? And how should we be applying them? Now, we want to talk about those indicators and how to use them. Okay, I'll be using the CloudTrade platform for this one. So I'll be needing everyone to go to their CloudTrade platform. Okay, but before then, let me just run a poll or two. Okay, I'll be adding two polls right now. Okay, I just sent out two polls. Please, let's respond to it. Okay, let's check the poll section and respond to it. Thanks. Thank you very much for that. Thank you. Thank you. Let's respond to the polls before we proceed. Okay, before we proceed, let's respond to the polls. Okay, now let's talk about these indicators. Okay, these indicators. Let's talk about these indicators. The first one we'll be talking about is RSI. Okay, relative strength index. Relative strength index. Okay, relative strength index. Now, what is an RSI? What is a relative strength index? A relative strength index, RSI for short, is an indicator that lets you know the strength of that financial instrument. Okay, it gives you an idea of the strength of that financial instrument. That's what it does. Okay, it helps you know when price is gaining momentum and when the trend is increasing strength or reducing in strength. That is basically what it does. It helps you know when price is reducing in strength or increasing in strength. That's what it does. And how do you use it? Okay, so I'll show you on a chat box, on a chart right now. I'll show you on the chart right now. You see it on a real-time chart. See it on a real-time chart. I'm trying to pop up a chart on my screen. I guess we would opt for another chart. Okay. I'll just share another chart for the meantime. Let's see it on another chart. Okay, share my screen. Okay, if you can see my screen, please say yes or hi. If you can see my screen, yes or hi, it will be good to confirm that you can see my screen. If you can see my screen, please let me know. Okay, so RSI. Okay, this is an RSI. The pink box and line below, that's an RSI. Okay, that's an RSI. And what an RSI does, like I said, is basically give you momentum and strength of that financial instrument. Also, it has its perks, like giving out or giving off divergences that signals you ahead of time that price is literally looking to reverse at a certain area of interest. Okay, so looking at this chart, we have levels on the chart. Okay, we have a level on the chart. Now if you look below, you see the RSI and you can see levels down below here. Let me zoom in. Let me zoom in. You see levels down below here. We have the level 0 to 100. Okay, level 0 to 100, 0 to 100, 0 to 100. Those are the levels there. And these levels just let you know if price is overbought or oversold. Okay, those are what the levels do. Oversold or overbought. Okay, that's what the level does. It just lets you know, are people speculating on this pair too much? If they are, I want to take a break, look at what price has to offer before I make my trading decision. Are people not speculating on this pair? Yes, I can hop in on this trend. That's what it's telling you. Now look at it right here. When price went oversold, okay, I'll show you right here. When price was oversold, there, price was selling, yeah. Then price was oversold, yeah. What happened? They've oversold that financial instrument. Whenever a financial instrument is oversold, you start looking for higher prices. Okay. Now look at this area. Price was overbought. Price was overbought. Price was overbought. What did it give us? It gave us a divergence. It told us that very soon price will reverse to the downside. And look at what happened. Price went down. Look at what happened here. Price went up. So that's basically how an RSI works. That's how it works. Oversold and overbought region. Morning Kelechi. Overbought and oversold region. Divergences, strength index, strength of that financial instrument, and momentum of the trend. That's how it works. Simple and easy. So we have the two levels, 0, 100, and 50. Three levels to be precise. The 100 is overbought, the 0 is oversold, the 50 is the mean of the overbought and oversold region. So that's how the RSI works. That's how it basically works. Okay, so let's go back to the slide. Now, a MACD, okay? A MACD. Now, a MACD is combination of moving averages and using it to spot divergences and convergences, okay? An area where price comes to settle. That's how it's basically used, okay? That's how a MACD is basically used to spot these areas in price, okay? To spot these areas in price, areas of divergences and convergences in price. Now, it helps you to understand trend direction also, as well as the momentum of the trend. Remember, I said I have three oscillator indicator, and MACD is one of them. Okay, MACD is one of them. MACD is one of them. MACD, RSI. We've talked about RSI. Now let's see MACD in real time. Okay, let's see MACD in real time. Okay, I'll share my screen right now. Okay, so we have a MACD right here. Here's how it looks, MACD. And MACD basically does the same thing, okay? It has a zero level, which is the neutral level. Then we have the negative level and the positive level. So all we have two moving averages there. We have two lines. One is an exponential moving average, and one is a signal line, which is derived from an exponential moving average also. Okay, it's derived from an exponential moving average also. So the signal line and the moving average needs to cross before we can be able to spot a change in trend direction or a reversal in trend direction. So I'm spotting all those areas out. Spotting all those areas out. Okay, let's spot that big one. And this one. So you see, every single time the signal line and the rest crosses, okay, we have price change direction to the top side. Okay, we have price changing direction higher. And anytime it crosses above, we have price changing direction below. Now that we crossed here, that is it. We have price changing direction up. So that's how the MACD works. That's how it works. You use it to spot trend changes and reversals and the likes. Quite easy to use and also not stressful. Very easy to use and not stressful. Okay, so I'll stop sharing this and we'll go back to the slide one more time. I will talk about the next thing on the list. Okay, so we have the stochastic. Okay, the stochastic. Now, the stochastic is actually an oscillator also. It just measures current price level relative to the range of price. Okay, how price has been moving. That's what it measures. Price level and the range of price. Price level and the range of price. Range of price, how price has been moving for quite a period of time. It just measures this price level. And also it works relatively like an a MACD also. It works relatively like a MACD where you get to use it to spot those reversals that I just showed you. Okay, use it to spot those type of reversals on the charts. Okay, use it to spot those type of reversals also on the charts. Now let's see it on a real-time chart. stop sharing and I'll share my screen. So here we have the stochastic. Okay, I'll be adding the stochastic in a few minutes. It's loading. Should be up on the screen in a few minutes. I just used the RSI at 14 alone, okay? I use the RSI at 14 alone. I don't change the figures. I feel RSI, the figures shouldn't really be changed. 14 is like the most basic and also, how would I put it? The most basic and basic and default. Yeah, okay, basic and default value. Okay, so this is the stochastic right here. And you see it's quite rough. That's how it is in real time. I didn't make changes to the values or anything. There's no changes made. Defaults. It's at default, so no changes made. You can see how or what happens when price crosses over. And see what happens when price crosses over. See, now price is crossing over here now. That's why I see price was giving off a week at this area. Plus, we have resistance here. So you see everything we've been discussing previously, it adds up. We have resistance right there. So this means price is going to go down a bit on this. Just from using what I just thought right now, it works. It's very easy and very easy to apply. That's just very, very easy to apply. We have resistance. This is me using support and resistance with MACD. You're just using support and resistance with MACD. So we can see here also we had a cross to the upside and price started going up. Here we had a cross to the downside, price went down. We had a cross here to the upside, price just starts going up, and here we have a cross to the downside, price would go down. That's how it works. Not difficult at all, very easy. Now let's delete all of this and go to the next indicator on the list. So to the slide. Now the moving average, the most favorite indicator to me is the moving average, because I know the powers of the moving average. Everything I thought, most of my strategies when it comes to indicators are based on moving averages, because I know how close to accurate they are. Okay, close to accurate with a few tweaking and all. They give you the type of price action you want. Okay, so the most popular moving averages are the EMA 50 and 200. Okay, EMA 50 and 200. Exponential moving average 50 and 200. Okay, those are the most popular ones. And yeah, let me share my screen and show you. So a moving average basically tells you the direction of price. Okay, it tells you the trend direction of price. Okay, trend direction of price. Trend direction of price. Majorly the trend tells you trend direction of price. Trend direction. Now, when we say trend, it's just basically is price going up or coming down. That's what it means. Is price going up or coming down? Trend direction. That's all it means. Now, let me show you the example on a real-time chart. So let's add, like I said. So I said the most popular is the 50 moving average. You can see what it's doing right here. It crossed and tells you price is going up. It crossed down right here, it tells you price is going down. It crossed right here, tells you price is going up. Cross right here tells you price is going down. Like it never stops. Now let's see the 200. The 200 just crossed once. I'll show you where it crossed. Okay, it's still far. Okay, it just crossed once here. Just crossed once right here and tells you price is majorly bullish. So basically, you can decide to use the 200 moving average or the 50 moving average, anyone that works for you. It will still tell you direction of price always. And if I was using it with support and resistance, I'll show you something right now and how it really works. Support, resistance. See how I would have bought price from here and went up. This is resistance also. I would have bought again from here, go up. This is resistance. Sorry, that's support. And this is resistance. I would have bought here and bought here also. Resistance. I would have bought here. Like every time when you use these tools with something, when you add it to something, it works. When you add all of these tools with something, it works. It can be basic support and resistance. It can be whatever that works for you. Okay. Sometimes it's not. Some people just use trend lines. Okay. Some just use trend lines as a supporting tool for it. Some just use trend lines. Like I'm a big fan of trend line. Not the way everybody uses trend line though, but I'm just a big fan of trend lines. Just a big fan of trend lines. Let me show you an example. See this right here. Every time price came back into the trend line, it went up. It's aligned with the bias of the 200 moving average. It's not difficult. It's very, very easy. Very, very, very easy. It's not difficult at all using these tools in the financial market. Now, let's go to the next indicator, okay? Let's go to the next indicator. The next indicator on our list, let me share my slide and we have the fractal, which is the last one. Now, the reason I love the fractals is most people think it's just showing you arrows up and down, but no. What it is really telling you is swing points in price. Okay, swing points in price. That's what fractals tell you. It helps you highlight swing points in price. Now, what are swing points? Okay, I would explain on the charts. Let's go to the charts. Remember, I said price goes up always. Okay, I didn't say price goes up, but I said price goes up or down. Those are the two ways price goes. Okay, now price just can't continue going down. It just can't continue going up. It has to give you some sort of reaction. Okay, so we use this CAD CHF 5 minutes time frame for our example. Let's get fractals on. Trying to see. Sorry. Trying to get the fractals on. Okay, so I said fractals show you swing points in price. Okay, I was not kidding when I said it. Now, what are swing points in price? Let me hide all of this. Let me hide all of this. Now, remember price. Sorry. Remember I said if price wants to move. Okay, price can't just go like this. Okay, price can't just go like this. Okay, price has to 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 Remember I said something like this in previous webinars. It is still going up, but not just going up at once, okay? This is how price is meant to move always. Okay, this is how it is meant to move always. This is just impulse and correction, direction of price. Now, fractals form at swing points. Where are swing points? Okay, swing points are this highs and this lows. This highs and this low. This high and this low. This high and this low. Those are where fractals form. Okay, now I'll show you in real time now where fractals form. Look at it. This is, I'll reset my chart for everybody's sake. And let's just look at this. See this line I drew, the piece of price action I kept in some sort of a cage. Look at it. Fractal, 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 fractal. Like you see, every single time price fractal forms, it's just telling you that, okay, there's a tendency price might be changing direction or the way it moves from this area of structure. That's what it's just telling you. That's like the idea it is giving you. Now, the reason most people don't use this indicator is because of not everybody fancies it. And the truth is, it works. It works all the time. The indicator works all the time. Once you understand price action itself, okay. I'm not telling you it's an holy grail. No, I'm not telling you that. But I'm just telling you, once you understand how price works, the concept behind price, you see this indicator working superb for you. Like working the way it should for you. Because it's all about understanding how it works and how you should be applying it. So that's it on the last indicator. Let's go to our slide and see what we have on there next. Okay, so we've got conclusion. Now, I so much like the conclusion part because I get to talk to you in-depthly about price and get to see or have a peek into what you're looking at in real time. Okay, so the idea behind the webinar is not just for you to attend the webinars. No, it's not for you to attend the webinars. The idea behind the webinar is for you to attend and implement. You can learn all the old concepts in the world, and if you don't implement, it's nothing. It's nothing at all. So all I want from you is to go back to your chart. Okay, go back to your chart. Go back to your chart. Go and look at these things on your chart. See how they work. See what you'll be applying to it. See if what you'll be applying will also work. See if it aligns with whatever you are looking at. That's how you become or you gain mastery in the financial markets. Mastery doesn't come easy. Okay, mastery doesn't come very easy. To some people, it comes easily. You see someone started trading forex last week and making a lot of money, and you've been learning for 5 years or so, you're not making money. The truth is, he is implementing. Okay, he's implementing, he's practicing, he's seeing these things over and over again. You should do the same. You should do the same also, because that's all that matters for you to become profitable, consistently profitable. Okay, there's a difference between profitability and being consistently profitable. You'll make profits on few trades, but can you maintain that streak of making profits? Most people don't know how to. That's why this class is meant for us to help you discover that. It's meant for us to help you discover that. Yes, 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 it's difficult to be able to be consistently profitable. It's difficult, but that's the whole idea behind it. You need to learn you need to learn how to be able to control yourself, control your emotion, manage your psychology so you can be profitable in the financial markets. Yes, the copy for the webinar will be on our YouTube channel. You can check the YouTube channel at your leisure in about an hour from now. The webinar will be posted on the YouTube channel so you can access it anytime you like. Okay. So also Also, um, take it slow, okay? Give it time. Profitability will come to you. It doesn't happen one day, it doesn't happen one night, it doesn't just happen, okay? It will come to you if you put in the work. Put in the work, study, spend time with the charts. I can tell you, all this was not an overnight success, okay? It was not just me waking up and deciding that, okay, yes, I will be profitable today. No, it takes a lot more than that. And that's the truth behind it. That's the truth most people don't want to hear, but that's just the truth behind it. You'll be profitable, you make a lot of money, but you need to put in the work also to be able to make a lot of money. So, in the absence of no question at all, okay, I'll share the PDF file also in the Telegram group, but it's not even about the PDF file, it's about what I'm saying. Okay, I think it's not about the PDF, it's about what I'm saying, you being able to listen to what I'm saying. There's no PDF file, just 2 slide. That's the PDF you'll be getting. It's majorly what I'm saying you need to understand, you need to dig into, you need to let resonate around you. So in the absence of no question at all, I wish you good luck and good trading. The easiest way to grow your wealth is it's on your Equal Global Markets platform, your Cloud Trade. You find it on your Cloud Trade. Once you log in your Cloud Trade, check the studies. You see Williams Fractal or Fractals there. You find it right there. Okay, that's how you add your fractals to your chart. Okay, so in the absence of no question, I wish also good luck and good trading. Catch you on Thursday. Bye for now.